to the Trading Market Technicals Morning Call video for Tuesday, September the 3rd. Hope everybody enjoyed their long weekend here in the States. On Friday, we did have a bit of a down day. Choppy, very, very choppy trading. That was partly due to the fact of the long weekend. Dow Jones down 30, NASDAQ down 30, S&P down 5, and the Russell down 16. Had some interesting developments over the weekend. On Sunday night, China came out with some good econ data, which kind of fueled a risk-on appetite, and futures were up pretty much all day, about $16, and we're up about 17.5 right now in the early morning pre-market session. So it's interesting to see if we're going to hold those gains. A lot of the charts were really starting to break down, so there'll be some interesting developments. Now remember, we are coming into seasonal weakness. September and October are usually notorious for bits of selling. However, the few Septembers, if I remember, a couple of years back, we didn't get that selling. We actually rallied all the way into the end of the year. But again, things do change, so just keep that in mind. I do see a bounce, and if we do get a bounce here, like anticipated, because we are a little bit oversold, indicators are still pointing lower. I think that would be a good spot to sell into. Now we got a little bit of a dead cat bounce early on the beginning of last week, and then the markets kind of sold off again. And again, due to the possible Syrian conflict and a lot of other things that investors are starting to worry about, we are at still extended at these levels here, and it'll be interesting to see if the markets can actually regain its footing and start to move back up and start to regain its trend to up, versus right now in the short term we are headed lower. Okay, so let's just go. I want to get into the charts. I got a lot to show you. Here's the bullish percent BPS SPX, and as you can see here, now this is all going to change today, guys, because we are going to probably open. We're going to gap up pretty big, and we're going to see if we're going to hold these gains or not. Right now, we are looking lower in the BP SPX, and as you can see here, even if we did kiss back up in the area here like we did, we'd probably just fail again. We're coming into some really important numbers as areas of locations where I want to show you that we'll have some pivotal support areas. Okay, now let's take a look at the NASI. NASI is coming into the weekly NASI summation index. This is still on a sell signal and still got a little bit of way to go. So remember, there's a weekly chart. This we'll take a look at this at the end of the week and see if we actually get some sort of a buy signal in here. This is actually a very good overlay, the 5-3 stochastics, which I love to use, and it's been on a sell signal now for 5 weeks. Okay, the second week really is your confirmation. So, you know, for a good 3 weeks, we've been on a sell signal here. So that's interesting developments, and we are still on a sell signal, and we can actually continue to move much lower. Okay, here's the New York Stock Exchange summation index. Same thing. This is also on a sell signal, and the Dow is really starting to succumb to some selling pressure here. It's really starting to break down, as well as the transports, and I'm going to show all of that to you in a moment. Okay, let's take a look at the NYMO. Now the NYMO really isn't telling us anything, as you can see here. Like, now the other indicators are saying that we're on sell signals, and this is actually neutral. We're still in a neutral territory, so it takes a lot to move the McClellan oscillator, but it's a very reliable indicator. So this here tells me that we can either move higher and or lower and not be overbought and or oversold. So if the market wants to sell off again, it has plenty of room to run to the downside before we really get our oversold reading. Take a look at the VIX. The VIX had an outside shot to close outside the band again, but actually did not. And then we came back in to close inside the Bollinger Band. So other than the fact of fear starting to step in, as you can see here, we have had some nice positive divergence down here at the lows, and now we're just starting to get up to these lofty levels here. Still not overbought in the RSI. We are overbought in our 14-3 stochastics, and again reaching overbought levels in the MACD. So maybe another big push up if that were to be the case, and then start to sell off again. Again, even if we rally, I do see us getting one big scary sell-off to kind of shake out a lot of the weak longs, and then rally going into the end of the year. Remember, guys, everything does change rather quickly when you have political uncertainty here and geopolitical uncertainty in Mediterranean. So very Very, very interesting to see what's going to happen with the Syrian conflict. He had spoken on Friday, Senator Kerry, and it seemed to me they kind of backed down a little bit. So we'll see what happens here. Now, speaking of that, let's take a look at oil. I do like the oil trade still. I love it, but we are on a sell signal in the BP-ENER. I think this next pullback, where this would be, and I take a look at this USO right here, this area here, if this could fill the gap and get back into this area here, then I'd say that this would be a great buy area. I would even like it up here in the 50s. If we can get the BP-ENER down here to this 50 area again, this is your mean right in here. And then we fill this gap, I would definitely like to take a long play in the USO if that were to materialize. Take a look at the, let's take a look at the CBOE put-call ratio. We did get a little spike in fear, which was bearish here. We closed at 112, finally broke out of this range from the middle of July into August. So we'll see if how this develops. Obviously, if it closes strong today, the market, we're going to close back down again. But this was just interesting here on Friday. I think people started really getting a little nervous that we've been really starting to get some weakness in the market. And then the XLF, as you can see here. Now, the banks really starting to, they started anyway to really look not so good. But however, if the market can hold itself, I think that banks will be one of a decent play. But here is where the problem lies, is right here. The S&P, here's the cash weekly chart. We are in an uptrend channel, right? We can see here a clear uptrend channel. It depends on where you want to move your line, whether it be down here at this little wick, or bring it back up, and then you could say that the S&P actually broke the uptrend channel, or you can say that we are at the uptrend channel. So depending on where you hold the line, it really doesn't matter to me. I would think that it's going to, if it's going to break, it's going to break either way. So you can draw two lines if you like. I like to just keep things really simple here. Price actually hit these two lines, and not exactly exact symmetry here with both sides, but close enough. And to me, this is where the problem lies. If this market, if the S&P loses this area here, I think you're going to see the June 24th lows. And then if that breaks, then I think you're going to really get a real big push in selling coming into this market. And that's something that we're going to really need to watch here next couple of weeks. Because if we're going to need to hold this, and I do think we probably hold. I don't think we break lower, but if we do start to really push lower on a closing basis, I think you're going to end up seeing really low 1500s in the S&P cash. Now, again, I think it's far away. I don't want to be saying that that's going to happen, but we're going to need to hold this area here this week, guys, the 1620. Even call it let's call it 1600. 1600 is really going to need to hold, otherwise you're going to see that June 24th low. Take a look at the daily chart, and here's the June 24th low, as you can see here, coming in at 1560, coincides nicely with the 200-day moving average. We are not quite at the 61.8% retracement off the highs here from the lows, so a flush down to this area, 1600, 1617-ish. I think that you can see this rather quickly. Again, might not be today, but that's the level that I'm going to be watching in the coming days and weeks. Here is the S&P, the Spider monthly chart. Just wanted to show you we did touch the upper end of this uptrend channel, and we actually pulled back here. So we're starting a new month. It'll be interesting to see if this is going to hold a 157.87. That's a big area, so I definitely write that down as well. Same looking chart as you can see here. Now this is going to be the key area. If we lose this area here, 162, 160, let's call it 162.90. Then I think you're going to see that June 24th low. Now remember, we are, this is the weekly chart of the spiders. Now we are, really, we've actually, well, we're sitting right on the 20-day moving average. We haven't quite broke the 50. We're still way above the 50 and way above the 200, so that's still positive. But this area here, you see this weekly chart, is really going to, a lot of these traders and longer-term investors and position traders are going to be watching this area, because if we lose this area on a weekly basis, I honestly think that you're probably going to see the June 24th low. take a look at the daily chart, you'll see what I'm talking about. We've had inside days for the last 4 days in the spiders, so really no movement, which is okay. But we're hovering around this area here, and this is the 50-day. We have the 50% retracement around 163.40, 163.20. So 61.8% retracement is not out of reach here. Okay, and here's the June 24th low. So that's going to be the next area, next target area if we lose this 61.8% retracement. And here's the 60-minute. As you can see, 1628, I think 1630 was our first target when we actually put this together, and it did hit our first target. Now, and here's my concern. Thin zone all the way down to the June 24th lows. If that were to break, I think that there's really nothing stopping this back down to get down in this area. And you can maybe a little bit of demand down here at the S3 area, but once that gets lost, you're going to see that June 24th low. So that's the concern I'm looking at and monitoring in the next coming days and weeks. Now here's the Bollinger Bands. As you can see, it's been pinching. So we are up pretty big in the pre-market. We should have the Bollinger Band starting to widen again, and we'll just see. We'll see how this opening happens, and if the gains are going to be sustainable here for the rest of the day. Dow Jones now really acting weak, obviously partly due to IBM. IBM really weak here, and we're going to need to see a lot of these sectors start to turn around. And again, aside from today, as of the Friday's close, we really were looking pretty bad. And here's the Dow Jones. Take a look at the Dow Jones. Now take a look at transports. We lost this pivotal low, this horizontal support, and this is not looking too good. Now, if we can get back above it and start to break back above the 50 and the 20, then I think that this is going to definitely help the Dow Jones and definitely help the bullish case that we could possibly see an upside resumption of the trend. Now, right now the short-term trend is down because we're making a series of lower lows and lower highs. So right now the plan would be looking to short any weak stocks and short any rallies of the weak stocks that you're looking for. Here's the Russell. As you can see here, we broke the 20, broke the 50, broke the long-term uptrend line from the November 2012 lows, and we're just sitting right below it. And as you can see, with the Dow Jones being weak, the IWMs being weak, and of course the transports being weak, this looked like to me, and the spider is really just hanging by a thread on that weekly chart. It looked like that we could get a possible flush in the market. Now, the only thing that's holding this was the Nasdaq, and I'm going to show that to you now. Here's our head and shoulders play that we had back a few weeks back and held nicely, and we have hit our second target in the uptrend line of 2012 lows. So this area now is hit, and I would look for, if the market were to continue to sell off and you're still short the SMH or any semiconductor, I would trail your stops and look for a target, a bigger target of the 200-day moving average. Okay, as you can see here, look at the thin zone. When the market sees that, when the market starts to break these areas of congestion and resistance areas and start to break down, there's really nothing holding price until the next area of support, which would be the demand area right in here. So just keep that in mind when you're trading. Take a look at Goldman. Goldman here, again, as you can see here, the thin zone area, we flushed all the way down right into support area. Here's your demand, and now we're just above the 200-day moving average. Now, we could flush much lower to the 200-day and then reevaluate it. But if Goldman can hang in this area and hold, remember, you're below the 20, you're below the 50, so your moving averages are rolling over, pointing lower, meaning prices are moving lower as well, making lower lows and lower highs. But for a retracement rally, if you wanted to buy Goldman for just for a couple of points for a trade, you can do that with a break above 155. That's what I would be looking for. But in the bigger picture, I would be getting your watch list ready, because if the market does flush, you want to be looking for the strongest stocks and the strongest sectors for a rally going into the end of the fourth quarter. Okay, here's the XLF. As you can see from the XLF bullish percent I showed you earlier, you can see how we're breaking down bear flag, and here's another bear flag here. If you want to draw it, you can see easily a bear flag pattern. Okay, so this is something that I'm going to keep an eye on, because if you have the transports weak, you have the bank sector weak, you have the semis weak, you have the Dow Jones weak, and the Russell weak, and the last what you have here is the and let me just pull that out, is the Qs, which would be the NASDAQ, holding up very, very well. It is one of our leaders. Can the NASDAQ bring the market back up again and start resumption of its trend? Absolutely, it can. But we're going to need a lot of help from the other sectors that we follow. Can't just have the NASDAQ running up and everything else starting to break down. Look at our emerging markets, the EEM, which I don't have on a chart. I wanted to show you. That is clearly breaking down. And when you have trouble in the emerging market area, what's happening? You're going to have problems in commodities and oil and gold. Now, we had the gold trade lined up, and I mentioned gold way back when, a few weeks ago, and I said I like gold in the back at that 14, 16-ish area. But what happened is, again, the second time this happened, gold hit that number, and that was, I believe, Thursday going into Friday. And that actually, we rolled over Thursday night. We sold down to about $13.90, then we broke down again on Friday. And now the last thing is that I wanted to make a quick point in is the dollar. And I said, watch the dollar. Dollar is going to be key. The dollar, I think, has put a short-term bottom in. We are trading at, I believe, we are trading at around almost 82. And the dollar now, even though the dollar could come in a little bit, if you have a big upside push in the dollar, you're going to have commodity stocks really get clobbered, as well as equities. Remember, that the relationship right now is inversely correlated. Can that change? Sure. Can the dollar rally with equities? Absolutely. But right now, what we have is an inversely correlated market with the dollar and risk on and risk off. Dollar up, commodities and equities lower. So just keep that in mind for now. I do like gold. Right now, gold it's the short sale in gold back at the upper areas. I don't like it at these areas. I'd like to see it rally one more time back into congestion area and then look to get a short off. I do like crude oil higher. I'd rather not short crude. I'd rather be a buyer on pullbacks, only because of this Syrian conflict. Anything could happen. You wake up one morning, oil's up $3, and your short trade is blown out of the water. So I'd rather you play oil, on the long side and buy that pullback. Let it fill the gap to buy USO. I'd be a better buyer of that. But this week's going to be very interesting. Now, it's going to be slow today, I would imagine. Also, a lot of the bigger players start to come back towards the end of the week. We'll really get a full good trading week next week. So this week is a good preparation week. Take a couple of small trades here and there. Get yourself acclimated to the new month. And let's really dial down. There's going to be a lot of volatility coming in September, and of course the beginning of the fourth quarter. There's going to be a lot of opportunity to make money. So be cautious, be nimble, and be ready for when the market does turn. Either way, you're ready to capitalize on some great trading. All right, guys, have a great day, and we'll speak to you tomorrow. Take care.